What is being said in those conversations? And I don't necessarily want to know from who, but just what's kind of the behind the door conversation around the macro environment and Bitcoin specifically, and kind of how people are viewing this?
So the macro environment, you rightly alluded before, almost everybody I know has a personal allocation to Bitcoin. Now, Dan Morehead was first to understand that this was going to beat all other assets. And then it sucked in, one after the other on. Probably John Burbank was probably next. And then, Novo, and it just starts, taking people in.
People don't understand that you guys are all friends, right? They don't understand that there's an entire, I'll call it generation of macro investors that basically grew up together and went through their careers. And somehow it went from, one trade to the next trade. And when Bitcoin became an opportunity, literally it just walked down this entire kind of loose collection of friends until everyone had exposure.
Yes. I mean, so if you think of the macro network, it's not that many people, right? So it's basically the epicenter was probably a few firms plus Goldman. And then, out of that, a bunch of traders at JP Morgan, a bunch of others came out of that. But really it was Tiger, Soros, Tudor, More Capital, Caxton, Omega Partners, and a few others were the big macro players. And those alumni are everywhere. So Dan Morehead is Tiger, I think he was ex-Goldman as well. Dan Tapiero was almost all of those. I was ex-Goldman, and then I was running a large hedge fund. So I was a salesman at Goldman, so I knew everybody. So I've been in the middle of the whole lot. So we all know each other. And if we don't know each other directly, we know of each other, because it's not a big universe of people, but it had tremendous influence and huge amounts of capital. And it was a very exciting industry, because back in the day, these firms could have 15%, 20% volatility and had huge bets. So you'd get to hear famous people famous in our world, Nick Roditi, who was actually the big swinging dick at Soros. He lived above a store in Hampstead High Street in London, completely below the radar screen. But he was the most aggressive risk taker I've ever seen in the industry. Even Stan Druckenmiller says, I think Nick killed Stan on returns, but his volatility was enormous. The size of the risk this older, very quiet guy would take was astonishing. So anyway, so that macro world had high risk taking and high returns. In came the pension funds, in came the insurance companies, in came the sovereign wealth funds. And they said, well, we don't want you to be so risky. And they're like, yeah, but you're not going to get the returns. They're like, well, we don't really care. So they crushed volatility down to 5%. Comes the rise of Millennium and all of these big platform plays where they have lots of traders, low volatility, much lower returns. 10% is a great year. And so what happens is these macro guys start either turning into family offices. Lewis Bacon from More Capital, George Soros was first, Julian Robertson, they all did. Because they're like, fuck that. I want to make money the old fashioned way, which is not by having assets, it's by taking bets. These guys are the great speculators. And then some of those guys went, this Bitcoin thing's interesting. Now, most didn't get it in the beginning. They saw it as a trade. And then everybody saw it, started to see it. Oh my God, there's a parallel universe coming, and it's all going to generate alpha. Because there's no capital and not enough knowledge in the space, because everybody in it was a technologist and none of these macro guys were in it yet. So the macro guys went, here's an opportunity for us. And one by one, they all started going, have you seen this? If you ask Mark Yusko, if you ask Dan Tapiero, they will say that they really got into this at a global macro investor roundtable of mine. I think it was either in Cayman or in Spain, where one of the other global macro guys, another ex-Goldman hedge fund guy, says, by the way, I started a Bitcoin exchange, and you need to find out about Bitcoin. This was 2012. And when we started learning about it from them, and that network then spreads, starts talking about it. So we all kind of got polluted at the same time by similar people. It is a network. And that pollution is, so cut to, I get a phone call on Sunday, one of the, again, I can't mention him, he's one of the most famous hedge fund guys in the world, and one of the greatest traders I've ever seen. And he really made his money in money markets. He's a rates trader, right? He's a world with no interest rates. So, and I've been bugging him about this. I mean, he's been in crypto for a long time. He knows it. But I was bugging him like, there's only one trade that matters. And the conversation on Sunday is, there's only one trade that matters. So,
and so when somebody like that, who's got world-class experience, access to enormous amounts of capital, I'll just kind of call it brass balls in terms of the experience of taking big bets with big volatility, what do they do when it clicks? Do they go, let's go 90% into a position, or are they kind of have their hands tied because of who their LPs are, the fund size, the position sizes, and so they may only be able to get 10 or 20% exposure, and then they've got to figure out what to do with the other 80% of the bucket of capital?
Firstly, he's a multi-billionaire. He doesn't need to become worth 100 billion. It's not relevant really. So it's the game now, right? It's the game plus making sure that his capital grows a reasonable amount without blowing up, right? That's the game. Once you've made your billion, you don't want to lose it. So yes, so he exactly as you said, he's in a slightly unusual situation. I can't reveal why, because everyone knows who he is then. But to take an irresponsibly large bet within the fund, not easy to do for the LPs and everything else and the other reasons. But in his personal wealth and parts of the portfolio, you allocate to VC, you allocate to crypto itself, you allocate to other opportunities, you just get involved in the space. And, a lot of people like John Burbank, they did the same thing, get involved in the space. You guys did the same thing. It's basically the same bet. It's layer on that bet in a number of different ways, and then let's see where that goes. Others, I'm sure we're going to see people taking more aggressive risk, but most people in a hedge fund structure can't. We will see one or two, I'm sure. There are crypto hedge funds out there that have done astonishingly well anyway. I think a lot of those are going to get bought. So I was speaking to a crypto hedge fund. So this is another part of what's going on, is they're all being bought. I mean, again,
it's just consolidation of kind of the new age hedge fund being bought up or consolidated with the older hedge funds who have lost the ability to get volatility and drive higher returns. So let's go to the new area.
Look at a firm like Arca. I always use Arca because they're super interesting, because they're doing a tokens-based kind of bottoms-up investing strategy, up 300%. Right? There's massive alpha in that space. Everybody calls them shitcoins. Nobody wants to be involved. So you do your homework, you can make returns. And there's a ton of firms doing different strategies, all got huge alpha. The hedge fund industry has no alpha. There's nothing. It's excess capital, too many machines, and restrictions on volatility. So there's massive alpha. So these hedge fund platforms are going, okay, uncorrelated, gigantic alpha. Nobody's seen this. A lot of the macro guys will have seen it in the emerging markets in the 80s and 90s. Other than that, we've not really seen it in our careers.
But one thing that you're mentioning here that I think is really, really important for people to understand is, and you actually tweeted about this, and I loved it, which was, look, I belong in no group. You can put no label on me, right? I basically look at charts and graphs and assets and the macro environment and trends and data and metrics, and then I make decisions, but you can't put me in a bucket. So the labels don't fit. And the reason why I bring that up is I heard from a very dear friend of mine once that he said, Steve Cohen, as an example, could sit down and look at a chart, regardless of what the asset was, and start trading it and be successful doing it, right? You just have some people who, it doesn't matter what the asset is. What they're looking for is the volatility. They're looking for, all sorts of kind of market structure things that they can then exploit for profit, right? And that's basically what a lot of these traders, and whether it was currencies or some other commodity or whatever, like that's what they were doing. What I think is interesting is the difference between Bitcoin and, quote unquote shit coins and kind of the rest of the bucket to somebody who is looking at it from a holding standpoint, right? Or an ownership standpoint. I put them in the investor or the saver category. There is massive, massive difference. You could draw a line in the sand that ends up, literally having tectonic plates shift in the earth because they're so different. But when you look at it from a pure, I'm a trader and I don't care if I'm trading gold, dollars, Bitcoin, or a shitcoin, all I'm looking for is volatility that I can capture returns on. all of a sudden, now you start looking for where is the opportunity. And I think what I hear you saying is like, it's definitely not in the traditional assets. It's in this new world. And then each person has kind of preference or an advantage in certain assets within the new world that they're going to go try to expose if they're a trader.
So, well, here's something interesting about it is that's how it starts. And then they start understanding about this new world. Now, whether you anchor on Bitcoin or you anchor on some other thing, you'll anchor on something of which you start building your knowledge base. Same as you when you got into the space, same as everybody does, right? So what happens is they come into it for the trade and stay for the future because we're macro guys. And I say this a lot and people don't really understand, we live in the future. We look at possible futures and try and predict them based on everything from charts to flows to fundamental analysis. And that's why they stay. And that's why they're agnostic to the tribalism. Because what they're saying is, okay, we see this. I don't care whether Bitcoin wins. I know that this whole space is going somewhere and I want to be involved. And then, so I've now got a future framework and I'll trade accordingly. And to come into it with a narrow mindset means that you won't be open to opportunity. Now, maybe the Bitcoin maximists are dead right and Bitcoin outperforms everything. Great, the macro guys will also be on that trend. That's their job, to isolate that trend. It's like otherwise saying, well, I'm a currency trader and, I'll only trade dollar yen. That's ludicrous, nobody does that. People look for the opportunity. But these guys are bringing real capital into the space too, because they are investing in startups, Again, people philosophically say, well, it's, those speculators, they're just taking advantage of this whole kind of Bitcoin philosophy. No, they're not. They're also feeding capital. They're bringing a lot of capital into businesses that are building on all sorts of networks. Some will fail, some will succeed.